Hello and welcome to Fish Wrap TV, episode 28. Today is Friday, September 3rd, 2021. This is your weekly market update brought to you by Croptimize. I'm Janie Hansen, filming live with Q Lair here in Blue Earth, Minnesota. We're back after a little break for end of summer vacations, catching up on the latest in the commodity markets. The big topic this week, Hurricane Ida, and we'll also review the jobs report. Q, what's been happening in the markets?
Well, markets were dominated this week by Hurricane Ida. All of the prognosticators were looking at exactly where landfall was going to be, and hope against hope that it wasn't going to hit New Orleans dead on again, just like Katrina did back in 2005. Ironically enough, Katrina hit August 31st, 2005, and this gal hit at September 1st. Yeah. So literally 16 years later, almost to the day. It did sweep a little bit left, and New Orleans got caught in the outer bands, but they didn't get hit dead on. So the worst got not really happening the way we had feared. So, but we did have a Cargill elevator get taken down. That's 9% of all exports in grains for the entire country. Yeah. So it is down now, and we've also got the Gulf backed up and the Mississippi River backed up because of barge traffic and barges, running aground.
So what's the impact of that on basis?
Actually, the basis is breaking out on the downside as people are just sitting around, and we're heading right into harvest now, which we've been talking about. And of course, the harvest is starting, in the deep south. It's going to be up here in the deep, in the deep part of the Corn Belt here in about 3 weeks, which is, everything is pretty much typical. The real problem is that after it made landfall, we had hoped that it would swing left and, drop some moisture out there in the prairies, like sometimes those hurricanes do. But the jet stream picked it right up, shot it right over to the East Coast, like we talked about, went right up the coast and just hit New York.
Yeah.
So
flooding there.
Yeah, flooding there. So it's really, and of course New Jersey, but we could use those rains out there in the prairies for sure. But that's what hurricanes do is, whatever they catch the jet stream, then they turn east, and that's the breaks for New York City this time. So it was really interesting, but with the river, it has really slowed down things. They're starting to think about transferring some business out to the Pacific Northwest, out of Portland. Okay. So swapping opposite origin and then shipping out of Portland instead of New Orleans, while they get the Cargill elevators cleaned up and get the rivers back running, out here in the middle. So very, very interesting, and it hits right at the beginning of September 1st was new crop for corn, beans, and spring wheat.
Yeah. So that with it being the new crop, that means the 2020 crop is now gone. And 2021 crop will start coming in from the fields in the next few weeks.
Exactly. So it's really, if you think about it, we were looking at 2020 crop when it first started at about 840 for beans. It went off in a blaze of glory. But what that's done is also 2022 and 2021 are setting here at some pretty fancy numbers that we haven't seen for a number of years.
Yeah. So with all this wild weather, what have been the impacts on the markets? Has it really affected the actual commodity prices?
The only thing that's really been a problem has been the drought or dry weather, which one you want to call it. We continue to get rain, so it's not what I call the classic drought. I mean, a drought is where it looks like the fields are just burned, and you've got these big cracks in the ground and stuff like that, like your 2012 drought. But this did put some damage into the corn, for certain in the spring wheat, and way for certain in canola. So we're picking up the numbers. We will know soon how much canola is out there and how much spring wheat. But the numbers came out of the crop tour, much higher than expected for yields in spring wheat. So it's just you got to be real careful, guys. You got to be real careful, because even from 2012 to now, the yields and the hybrids are much more resilient than they used to be. So I know you guys bitch about the cost of seed corn and seed beans and seed whatever wheat you're getting, but these crops are performing better in dry weather. There's just no doubt. And even 1988, it would not have been the same with these hybrids. So I'm certain of that.
Yeah, so just really keeping an eye on those, once the combines start getting in the fields, what those yields actually look like.
Yeah, and the thing, think about this as a farmer with you're trying to price your risk and everything else, but yet, like your dad and myself, I mean, we remember the '74 drought, before you were even on the earth. So, but thinking about that, and if we feel similar situations, but you got to be careful because you're not going to see the tripling like we saw in '74, the doubling we saw in 80, 81 after Mount St. Helens, and then of course 83 and '88. So you've got to be careful about this. So what this means as a farmer, you got to think about your genetics and really watch your yields, year over year for the certain spaces that you're in, and see how these things are performing. And I would love to know, but I know you guys would rather talk about, anything but your actual data.
Oh, yeah, the coffee shop talk, bar banter.
Yeah, all the fibbing that goes on at the bars. And
then some on the high side, some on the low side. You usually know which one's which.
Yeah, whether it's fishing stories or yield stories, but it'd be really interesting to see, year over year how these specific areas are working inside farms. But of course, we don't get that as traders. All we see is the results and what the market is anticipating and expecting. So it's really been interesting. 2020 was a hell of a crop year. I mean, we're going to be talking about 2020 for a long time, not just COVID, but how this thing really took off even in the face of COVID.
So looking ahead to next year, to 2022 crop, there are some nice prices on the boards, but the real key here will be input costs. With the run up in natural gas prices, fertilizer costs have jumped, inflation. What do you think the story is for making some of those inputs decisions and where things are at on the boards? Should you be looking at maybe locking in some pricing for next year?
Absolutely. The numbers we're seeing, and I mean, you have to, you got to realize this: the markets drive on expectations. Okay, we have futures that trade out to 2022 and 2023 for a reason. We do not know how much is going to be there, but we have a way of expecting what the prices are going to be when we get there. So, having said that, we're seeing some stronger back option moves because the spreads are starting to tighten the wrong way, really, and putting carry in the market. So having said that, we're seeing Nova 22, 23, and of course these 22 and 23 corn beginning to rally up here a bit and taking this inverse out of the market. Beans are like at 30. Nova is like 30 cents. It was $2. So it just shows you that 2022 is starting to get some interesting ideas going on. The real danger of this is we're expecting 94.3 million acres of corn and right at 91 million acres of soybeans.
Where are those for what you would have guessed earlier?
Well, these were the numbers I was actually talking when you and I were talking, and I said it's going to be that way. It could very well end up being like that when we see the numbers coming out of the fields. But having said that, these numbers are Econ 101, where you've got, when the markets give you these prices, you start planting. Okay. The other thing to remember is we're looking at 49,700,000 acres of wheat. I told you wheat was out there buying acres. Wheat is buying acres.
Okay.
So, what you're going to see is there's going to be less sorghum planted. There's going to be less, some of the secondary seed, grains are going to be planted into wheat. And wheat is maintained, $2 over corn, which I just don't understand, but there it is. KC, Chicago in December's now 3 cents. Okay. Remember 2 weeks ago before our break, it was 22 under. Yeah. And I said, keep your eye on it. So here it is at 3, heading for even money. So, the wheat dynamics are going to be really interesting, extremely dangerous this year. What we're doing is by taking, Kansas City wheat from 70, 80 under Chicago, almost up to even money now, and it looks like it's going to go overs. What we're doing is we're rebalancing the wheat structure the way it's always been, which is Chicago, Kansas City 50 over, Minneapolis 50 over Kansas City. So that's how the proteins, get balanced out. So we've been setting on a world glut of 11.5 to 12.5% protein wheat, obviously, between Russia, because they produce mostly, hard wheat, just like Kansas. And, that's what buried, Kansas City wheat for all these years.
Okay.
But what they're seeing is that, you can't substitute protein, but we had a dry harvest and there's protein coming out of hard wheat. So what you do, if you need 14% protein, you just put in the hard wheat till you run out of 14% protein. Cause they got some scales that are pretty hairy for hard wheat. But, the real thing that I've been telling everybody to watch is that KC Chicago Dees, and it's at 3 cents now, and it's just like one of those things where all of a sudden it's going to be 20 over, and you're going to say, "What in the hell happened here?" Because that's a buck move in the the intermarket. So it's really watching that, and then of course corn and beans coming up, and don't forget we've been talking about the huge acreage increase in Brazil. They have guaranteed that it's going to be at least 5 million hectares larger than last year. Early numbers coming out of Brazil for the bean crop is 140 to 145. If they print 150, it's game over.
Yeah.
150, it's over. And more than likely they will sometime during this year, unless they have another mega drought like they had this year. But, think about this. We had a drought here in the States, which, really hit spring wheat and canola. We had a big drought down in Brazil, which even dried up the Parana River between, Argentina and Brazil. So they're having trouble with navigation. If the La Nina breaks and we get normal weather coming back with all these acres, you gotta be careful because, your input costs are higher because natural gas is driving, underneath there. But if we get this acreage and weather, we're going to see a collapse.
Yeah.
So not that we're going to see it, this week or even in next month, but you've got to be careful, getting in love with this 2022 crop at these levels.
So really be paying attention to what's happening in South America. Right.
So, 2022 Dees corn is now $5, $5.01. So, we put a 5 on it. It's $4.80 for 2023 for corn. And, beans are, the bean spreads have, if you remember, they were huge, 80, 90 over. Now they're 30s. So these spreads will sneak up on you. You got to watch what they're doing because, spreads never lie.
Yeah. Are the indicators to pay attention
canaries
to.
in the coal mine.
Yeah. So, how about the jobs report? What's the news there? Epic
disaster today. They were expecting 723,000 jobs, came in at 230. It's just like, where can I get a job for 6 figures and be that wrong all the time? I mean, send it to, q@connectthegrey.com and, send me the 6 figures. I could just use the dartboard over here at the bar after about 10 beers and get closer to these guys who are, 6-figure economists. So it's really, this is like 4 out of 5 have been just epic misses. The underlying problem here is that, the New York Fed has a group that what they do is they forecast what they're seeing in GDP, based on, because with the Fed data, they know what's going on. Okay. They have lowered the GDP from 6.5% to 2.5, which is another epic disaster. And so the New York Fed, and this is, our new government, fired them. So, it's almost like if you don't give me the numbers, it's almost like Stalin, take them out and shoot them, send them to the gulags. But it's, the economy is decelerating rather rapidly right now. And there was only like 27 or 37,000 new manufacturing jobs in the entire country last month. So even though we're opening up, we're starting to see cracks in the engine, as it were. Okay, and I'm going to say this, I probably shouldn't, but all the major crashes in the stock market have happened in October.
Interesting.
Okay, 29, 87, I mean the big ones. So, we've got some frothiness going here. What really triggers that of late is October 15th is where all the real rich people pay their taxes. So, you what do you call it? Push them off until October 15th, and then all of a sudden you see the stock market, they're starting to pull big money out of the stock market just to write the checks.
Okay.
And that starts what I call the snowball effect. So not that we're going to see a crash in October, but I'm always cognizant of the fact if you're on a big market run like we are in the Dow, that you just may want to put on some coverage, if not just get out for October and let the heroes, play this game.
Yeah.
So, rates continue with with the jobs misses, money's going to continue to be, the Fed is not going to tighten. So it's really, we got this low interest rate environment, inflation happening, and the job market's, stumbling. We called that stagflation back in the 1970s, and it wasn't fun.
Yeah.
Where we had zero job growth and we had 10% inflation in 1979, and it was murder because it just chewed into your savings, it chewed into your purchasing power, and that's what we're seeing. So inflation's really, they say it's running at like 3 or 4, but it's maybe 5, but we all know that it's running real high out there.
Yeah. So what are you seeing in some of the other markets, like some of the other commodities?
Well, we're seeing people, running to gold. Of course, Bitcoin has run from like 35,000 to 50,000 of late. So you're starting to see some people flee into safety and flee into, as Congress continues to spend money to try to do something, that is going to continue to, weaken the U.S. dollar. So, dollar went from like 88, 89 to 92, 93. And it's starting to weaken up a bit now. But the problem is every other country is doing the same thing. So it's like, the cleanest, dirty shirt in the laundry basket is.
Which one do you pull out?
Yeah, you still pull it out. That's the United States, still the dollar. But it's, it's really interesting. And, natural gas, everybody is going to find out just important how natural gas is here real soon.
Yeah, especially coming onto winter.
Yeah, because we've got a solar minimum. I'm expecting a real winter this winter, and up here in Blue Earth, I'm talking about a real Minnesota winter.
North Country.
Yeah, not one of those sweater weather Kansas City winters.
Yeah, you got to toughen up around here.
Yeah, you have to toughen up, but we're okay here because we the gas lines and everything else. We committed years ago, but it was like even 2 years ago with the Algonquin line, there's very little gas lines up to the Northeast. They were paying $16. We were paying $2.50.
Yeah.
16, $2.50 here. So, it shows that, bad decisions really don't pay off at the end. And then you have to make huge infrastructure investments to, build these gas pipelines to get, off the main hubs, as they call it, and get them into these places and burning, heating oil. I mean, natural gas. I mean, the crude oil's running too. So that you've got to crack the crude oil to get to, your heating oil and your distillates. So it is not looking good for inflation at all here. So, and a couple of Fed governors have said, well, maybe it's a little more than transitory, which means look out.
Yeah.
Because those guys, they massage words to sort of keep, move you from here to there without going like that,
so
push it.
Starting a few of those stair step
deals that they really screwed the pooch on this thing. But freight's gone parabolic, from the Gulf into China and China back. So not that I'm saying go out and make a run on the stores, but things are going to be very much more expensive come January.
So, well, any other things to keep an eye on for the week ahead?
Well, there's going to be a huge blowback from this Afghanistan thing. So, I don't know what it's going to be yet, but I can just smell it. And the thing is something like this happening in September with October coming, it's one of those things that, could be like a first domino that begins to have people losing confidence, in the economy as it's being structured right now. And the fact that Bitcoin is just spiking makes me think, you got to be real careful around here. And, I do not envy people who have to trade, 10 years and 30 years, like some of my Twitter buddies. Yeah. It's just like, wow, you have to have just nerves of steel to trade that stuff at 1.2%. And, not get it run up your, what. So, the currencies are making their usual plays. It's really, with the corn and bean harvest coming, we're going to play the harvest weather thing now and see what happens. Also, I expect we're going to take the foot off the gas of wheats after we get, a guaranteed, 49, 50 million acres of wheat out there, because, the market has worked hard to buy those acres. And farmers, I mean, if you grow wheat, if you ever think about growing wheat, you got to put it on. It's got a 7 in front of it for red wheat, for God's sakes. So, I could see if you want to hesitate a bit on hard wheat out there in Kansas, but the thing is the way Kansas wheat's acting, you better, watch your wheat carefully here, and realize you don't get very many times where it's $2 over corn.
Cool. All right, well, to learn more about what this market info means for producers' grain sales, check out the website, thefarmcfo.com, for this week's Croptimize Hedge Report on the Croptimize Pro subscriber dashboard. Thanks for tuning in, and we'll see you next week.